Today we are going to discuss the impact on CFRM paper from the common pre-scene recently published by CA Sri Lanka. I assume you already went through the document, right? Based on that, I have summarized what I taught on the paper and what my view on the pre-scene, right? Therefore, I'm not going to read the entire pre-scene here, but I have read it and I have summarized and captured what I want to discuss with you here in the presentation. Okay, let's start with the current group structure, right? You know the group structure. This is Sunshine Construction PLC. It has mainly individual for shareholders and public holding as I presented. Punjibanda Apwami is the chairman. He has 40%. His son has 16%. Kamal and Yamunu has 2. And the public holding, very important. This public holding, they have 40%. Then that construction company has 2 subsidiaries. That is Sunshine Manufacturing Limited and SREL, that the real estate company and manufacturing of construction machineries. They are holding also presented here. You know, this SREL has 100% owned by the construction company, that's a parent company, and the SML only 80% to the parent, balance 20% held by someone called Edri Singh, right? That's how the group structure they have presented in the pre-scene. Then moving into the next slide, this is the board structure. Even though that pre-scene not clearly mentioned the name and the qualifications of the board members, there are some points they have highlighted the number of directors they have. After the shareholding in the pre-scene given, there's a paragraph mentioned they had 7 members in the board before the listing. With the listing, they recruited another 2. They appointed another 2 independent directors, Hemaka and Buwanaka. Then if you go back to the introduction paragraph of the pre-scene, you can see the Punchibanda is the founder, and he allocated another 4 seats for his 4 brothers, right? Initially told that he has 4 brothers and 2 sisters, right? But it's according to the explanation, board composition consists Punchibanda 4 brothers, Gamunu and Kamal, those who recruited over the period. In addition to that, they appointed 2 independent directors, Hemaka and Buwanaka. This is the board structure they presented. Even though this is not connected to the CFRM, better to keep in your mind the board composition, subcommittees, application of corporate governance practices, possible management override can be there. Whatever the subject, better you have to keep this in your mind, right? Not directly connected with CFRM, but you need to have understanding before answering any questions, the board structure and the people in the board, right? Then I have extracted financials and last three line and the equity line I have produced by myself. Other numbers they have given in the table, right? Based on that, what I have calculated, you can see their total revenue, external and internal. Internal means that elimination adjustment during the consolidation. Then net finance cost, income taxes, I have changed that order what they have presented, and net profit also given. In addition to that, they presented their total asset, that company wise and group wise, and the total liabilities. Based on that, I have calculated that equity, and I have double checked whether this equity is correct with the financial statement given. Financial statement given for the group, that group net assets, that is 10,975. Therefore, I thought this may be the approximate net asset value, that is equity value. That's the difference between total asset and total liabilities. Based on that, I have calculated 3 points, that is net margin, asset turnover, and debt to equity ratio, because I wanted to understand what are the possible questions that can be tested with the CFRM paper, right? Because the debt to equity ratio, asset turnover, net profit margin highly connected with CFR, that financial management decisions and risk management decisions. If you go through carefully, I have highlighted 3 points, right? In net profit margin, that SM has the NP margin, When it's come to asset turnover also, they have less asset turnover. But when it's come to the debt to equity, you can see that real estate company, right? I have summarized all the issues, but I'm just telling you now. Debt to equity ratio, you can see the SREAL, that is real estate company, having minus answer. That means the equity is minus. Equity is minus is, there are two symptoms. The number one is the highly geared. If you see that equity and the liabilities, it's highly geared. In other way, it's in the scenario of serious loss of capital, right? There are net assets going down and it's become minus. This is almost at the bankruptcy level, right? But they have reported more than 1 billion net profit, right? Net profit margin is 12%. Now see the scenario, it's a little bit complicating, right? They have a net profit, they have net profit margin as a group, right? Within the group, they report the highest net profit margin. But it's highly geared, serious loss of capital, almost in bankruptcy. That's the most you need to understand connected to CFRM subject. The moving into the next slide, the key highlights. These are the very important point what I have captured from the pre-scene, right? One by one, let's discuss. Then finally, I am bringing you into the possible areas that can be tested. Now, in key highlight, I have separated under three categories, that is three company wise, right? SAP is the parent. Then next two slide, you can see the other two companies, SREAL, SML and SCP, right? Key highlights. Okay, let's start with the parent company, that is Sunshine Construction. The Sunshine Group has been successfully involved in the construction of building, highways, roads, apartment and bridges. This is their business. This is very important to understand, right? What is the business they involved? They are purely in construction, but they will do all the construction activities. That is not only the buildings. Some of the ongoing projects were held up due to the current economic downturn of the country, with majority of the completed government projects remaining unpaid by the government. So the majority of the projects were held up, right? Up to last year, beginning of this year, mid of this year, you know that at the reality in the market construction sector, majority were held up. The management of SCP has taken a decision not to call for government tenders again because of the outstanding balances. Until government settle it, they are not going to quote for government tenders. That means there is a huge amount outstanding from the government projects. Now this is connecting to the working capital, right? Make a note, this outstanding balance from the government, and this company also highly connected with government project. Now it's outstanding. This can be connected to working capital topic, right? I have questions. I have that points highlighted, but make a short note. Then most important is the fourth item. I have colored in red, right? Board of directors of the company, that's the parent company, requested its independent director Buoneko to explore, right?
Excuse
New
me, sir.
overseas, sorry.
So, excuse me, sir. The ongoing projects were held up, so there may be a chance to wait option or something.
Yeah, exactly correct. Because that's why better you are talking to me, right? I have pointed out those areas. When some projects are held up, abandoned project restarting or re-evaluating the restarting, right? Or do we want to delay further? That is, real options can be tested here. Correct, Buddha? I think you also thinking about that.
Yes, sir. Yes.
Yeah, thank you very much. I have pointed out. Likewise, I actually welcome all of your ideas. That's better because this is not a competitive exam. Right? Everyone can pass the exam if you can score for 50. Therefore, don't worry. You can share everything from your people. Now, this fourth item is very important, right? Now, if you take your project appraisal lessons, you have three project appraisal lessons in the study pack. The last lesson, that is international projects, right? This is connected to that because they wanted to explore opportunities in India Bangladesh, Maldives, Middle East, African countries to secure new projects to bridge the potential shortfall in revenue. Right? In financial highlights, though, they have mentioned their revenue is coming down, right? They are facing massive working capital issues and cash flow issues. Now, looking for foreign projects is a worthwhile decision. Therefore, that international project appraisal lesson can be tested here. Especially, you know that if you go through the past papers, you have a lot of project appraisals questions connected to in India, Bangladesh. Recently, I can remember I completed one past paper question in my class related to Bangladesh project. Right? Likewise, foreign currency things can be also tested with question. It's highly positive area. Then Bhuvanek, one of the independent director who needs the audit committee, is not interested in having regular financial review. They talks about the lacks of audit committee actions, right? This is not connected to CFRM, but as I told you, you must understand entire business. It was connected to tax or maybe to the strategic management or maybe to the ABR, no matter. Try to understand. That's why I included this point. They have some that the lack of independent review on their financial activities, no proper internal control, that issue also they have. Right. Further, why I'm telling this, you may think this is not related to us, this is for ABR. Yes, but most of the project appraisals question or business acquisition, you can see after the question they are giving another 2-3 questions with 2-3 marks, right? They ask you what are the qualitative factors to be considered before accepting this project or before acquiring this company. What are the issues that company has to be count, right? Company has to be answers before accepting this project. Then you can take these issues as qualitative issues they have. Yes, if you're going for a foreign project, before going for a foreign project, you need an audit committee and proper internal control within the organization. Then those things you can directly write it down. That's why it's important in CFRM. Then in the last point, they mentioned what they wanted to do, right? They wanted to do establish proper audit committee, have a charter for them, proper internal control, then proper financial reporting standard application. Those are very important when you are going to a foreign project. If you are going for a foreign project, you have to work with foreign people, right? Then application of IFRS, that is International Financial Reporting Standard, is very important. Those are the qualitative facts you need to consider before go for a project. Therefore, you can write down these things as the answer for those qualitative questions. These are the key highlights of SCP, the parent. Moving into the SML, that is Construction Material Manufacturing Company, there are some important hints that examiner gave us. SML has steady increasing presence across the construction value chain through strategic investment in setting up production plant, and that provide key construction related inputs to support parent companies operations around the country. Keep it in your mind. This SML, one of the main objective is to support their parent company. Why it is important? The SML doing innovations, research and development activities here they have mentioned. They are doing research and development with Road Development Authority, right? Why they are doing it? Because their main objective is to support, right? They are construction company, that is a parent. Parent is doing constructions, this subsidiary doing production and manufacturing and distribution of construction machineries, some materials, right? Then what do you think? Can this sunshine sell SML, only SML? Will they sell it? That's the question we have. Will they sell it? That's a problem. Why? SML and the parent company connected. Parent doing the construction, SML doing construction material and plants manufacturing. Then SML gives big support within the supply chain of the parent company. Therefore, we can assume if Sunshine is going to sell, they twice or more than that they will think whether we want to sell SMA, because it's giving a big support to the parent. If they want to sell, they will sell both parent and subsidiary. That's the important part. Then they do two type of manufacturing model. That's the base method of the world, that is make to stocks. That means you will produce what you want and sell, and make to order. You will make special orders. Plant capacity expansions are planned of time through the annual capital expenditure plan, while annual budget allocations drive continuous and ongoing maintenance and improvement at all plants. That's the other point. Now they are planning to expand their capital assets, right? Capital expansions are planned of the time through the annual capital expenditure plan. That means they are going to have another big investments, right? Not only one, sometimes two, three or more. But they are thinking about the expansion of SML. Then again, it's connected to a project appraisal, because they may bring state of art new technology for the construction industry from a foreign country. Then examiner may ask you to evaluate that project, whether it's worth or not, right? For example, now SML will invest say 100 million rupees to bring state of art new technology from USA to here. It's a project, but funding come through SML. SML will fund 50% from their retained earnings, say the balance from bank loan. Then the cash flows of that project, that purchase of machineries or whatever plant, has to be discounted by SML risk factors, that is SML WACC. Those are very important things to understand, because if SML is going to do the project, that cash flows will come to the SML. How SML finance? Will they take entire money from the parent? The examiner will ask you, I can remember last year, last exam, that June exam, or before that, examiner asked, do the project appraisal with the perspective of the individual company, right? Likewise, there were some questions asked. Therefore, again here, a big connection with the project appraisal question. They are doing research and development with RDA to develop an innovative solution to appropriately modify the asphalt wearing course and binder to enhance the durability of road surfaces. Now see, the 2 points are connected. They are doing currently, right, research and development activities with RDA. Now, as a result of that research, they may enter into that new technology. Then expenses incurred on research and development is a sunk cost if it is a project, right? Everything can be connected. Based on this research, you are going to invest in this plant to enhance the durability of road spaces, everything, right? You can have a project appraisal question from there. However, due to the current economic setback, SML has lost local market share and incurred losses. That is because of the current economic setback. Keep in your mind, right? Not the future economic perspectives. Current economic setback, they have losses, right? That can be changed. Moving into the other subsidiary, that is a real estate company. They are doing property development. They already completed as the, it's not clear in the pre-scene. That's why I want to tell you, right? They have a project in Kolpiti. I think it has completed, not sold it, the apartment complex, right? Am I correct? What do you think about that? The student who talked to me, I like to talk to you. Yes, put any idea you have? As per the pre-scene, I think it's not clear, right? But it mentioned they are planning to market their apartments to the diaspora, Sri Lankan diaspora who living in for abroad in Canada, United Kingdom, or United States. That information tells us they have completed that project and they have abandoned a project in Jayasekara. I think you can hear me clearly, right? No issues.
Yes, sir.
Okay. Now, Kolpiti, it's a marketing problem, right? They have to sell the apartments. Therefore, it cannot be connected. If it is a completed and waiting for sales, it's a marketing problem in strategic management. But when it's come to Jayavarthanapura Court, it's that part, it's partly completed. They may provide additional information if they want to check this part. And hold, price was held up due to the scarcity of raw material, because of the imports ban, right? High prices caused by the restrictions on imports. Now they may want to resume this project again, because nowadays you can see a lot of apartment complex now again starting developing. Right now there is a big demand in Sri Lanka, especially in city of Colombo, main locations like Kolpiti, the Javardhanapura Kotte, Rajgir area, right? Therefore, they may decided to resume the project again. That resumption, to resume, you need to evaluate it again, right? Because all project appraisal, everything now gone. All prices, assumption, everything gone. You have to reproduce the project appraisal again for this project. When you reproduce, you have to evaluate whether it's profitable to start now or delay another 1 year. Right? That can be the question there. You can immediately commence the construction again, or whether we want to delay another 1 year. And see whether we can utilize sales proceed from Kolpiti project to the Kotte project. Right? Likewise, that real options can be tested here. I think you can understand what I'm telling, right? Kolpiti is ready for sale. That means company knows they are going to collect cash in next, say, 1 or 2 years, because Kolpiti sales comes into the company as cash inflows. Now, to recommence the Kotte project, company may decide whether I delay another 1 year and collect Kolpiti proceed and invest, or whether I can commence today using a bank loan or my cash surplus, right? Then your question will be, recommence immediately or delay by another 1 year to utilize Kolpiti proceed once to sell their apartments. That type of questions can be connected there, right? Because it's supported by the next line. Currently, after the relaxation of import restrictions, the prices has come down. Management decided to restart the project. Yeah, now management decided to restart the project. Market is almost the local as well as the overseas buyers. That's how they are going to start the business. Now, see, they decided to recommence, right? Now, recommence immediately by today using our retained earnings or a bank loan, or delay another 1 year until Kolpiti apartments sold. Then you have to do another real option assessment. I think it's clear, right? Those are the major highlights, that company-wise highlights you can understand. Then we are moving into the financial highlights and other highlights of the question. Okay, that pre-scene mentioned, the group revenue has dropped by 13%, the entire group, compared to the previous year, while revenue of the construction had decreased by 24%. Now see, parent company is in construction, their revenue decreased by 24%, but entire group revenue decreased only by 13%. That means the group made sufficient revenue from their subsidiaries. Now they impliedly told you they have a problem with the construction company. That's a parent company, right? If I go back to the that group structure, now this SCP individually their revenue by come down by 24, but overall group it's only 30. That means that SCP parent not made enough revenue to the group. What are the remedial actions? Divest or invest further. Very simple, right? Divest or invest. That's how that question will develop. Okay, divest means you have to sell the the company, right? Invest means you have to go for new projects, new construction projects. As they mentioned, they want to go to the abroad, that Indian market, Bangladesh, Africa market, likewise. Now, that question can be connected to that divestment, or they will go for new projects in foreign countries because SCP made the lowest contribution to the revenue. The gross profit ratio of the group has come down by 14 compared to last year, from 22%. Then the parent company, that is SCP's gross profit came down by 16, came down to 16 from 19, right? Then massive contribution for this decline made by the construction company, that is the parent. Now you can understand, parent will seek new projects or divest. Very simple. He further pointed out that this was mainly due to the low revenue of SML. That is, that balance, it's come from the SML. That SML loss is 38 million, right? If you go back to the financial information, you can see the revenue wise, SML has only 1 billion, right? And lowest net profit margin presented. Israel, it is in a serious loss of capital level, almost a bankruptcy, but they have massive revenue and a net profit margin, right? Parent also, now see that Israel and parent, they are in the same level of revenue, but Israel has big net profit compared to the parent. Now they identified SML make less revenue, that's why entire group profits came down, right? The chairman wanted to have a special board meeting. This point is very important, right? The chairman wanted to have a special board meeting after going through the financial performance of the current, that 22-23. The chairman highlighted the continuous drop in performance, especially at SML, with the market demand for products dropping by 60% compared to the 1890, and the company, that is SML, incurring losses and experiencing a rise in trade receivable, especially from the government and the corporate sector, by 50% comparing to the 1819. That's the chairman's view. Chairman thought that even though SML supplies material and machineries to the parent for the construction projects, it's not make a big contribution in profit wise, in revenue wise. And you can see my highlighted line. He stated that industry will not bounce back quickly. That means he believe this entire construction industry won't bounce back, won't boom again. That this started after the Easter Sunday attack in 2019, then COVID hit, right? Now we are in 2023, the almost more than 4 years gone, but still chairman believes that industry won't bounce back. It's a very serious statement made by the chairman, because he's the owner, actually he's the founder. If he believes this industry won't boom again, won't develop again quickly, that means he believes this industry will take another 3 to 5 years to coming into the normal level, right? That pre-COVID level, to take the pre-COVID level, he believes this will take at least 3 to 5 years. That's why not quickly means, right? Even though there are some positive signs of recovery of the Sri Lankan economy, very following by the debt restructuring process, right? Now it's very important point. Sri Lankan economy now gradually coming up, bouncing back, but chairman believes his company won't bounce back quickly. Now what he believes, big question, right? If you go through the reality of the market today, right, entire constructions companies running with short of cash. Some construction companies almost bankruptcy level, right? Some constructions has qualified audit opinions issued by big four audit firms. This is the reality in the construction market. Two big construction companies in Sri Lanka now they want to sell their stake. This is very important sign because recently, this is my personal experience. We also look for a acquisition of a construction company because one of the biggest construction company wants to sell their company, right? That can be a sign to have total business valuation for the disposal process, right? Then all the project capital, everything will be vanished. You have to have a big share valuation process to value the entire company shares to dispose the entire company. Because in the current real world scenario in Sri Lanka these days, two biggest, including one listed, looking for investor to sell their company by the original owners. Sometimes this pre-scene may selected construction industry because of that news. I believe, right? If so, very easy, you will have a bigger share valuation. You may have to value subsidiary separately or as a group or as a whole, and it will be a big question in your paper. Moving into the next line, the chairman further pointed out that group working capital management policy should be reviewed since the large pending projects were accounted for under inventories and last year progress of these projects were poor. Now, meantime, chairman thinks about to revamp their working capital management process. They wanted to go review it and revamp. Again, it gives us a sign that chairman wants to continue the business, right? Also, the trade receivable of the group and the SCP have gone beyond the group credit policy. Their normal credit policy is 45 days. Now they talks more about working capital issues, right? Many places in the pre-scene you can see they have talked about working capital. This happened in 2000. I can remember this happened in 2022 June. No, 23 June paper, not 22. 22 December, right? I can remember 22 December paper. I think you had a bigger working capital management questions and a very small valuation question. This time also that can be the trend, right? Because I have already collected two articles relating to the construction industry working capital issues. I think the examiner may sometimes tested the working capital matters. Therefore, that you have better to focus on working capital as well this time. He requested vice chairman. Now see, chairman again. Chairman believe industry won't bounce back. Right. In a divestment decision, sometimes company may decide to divest the entire group. When you decided to divest the entire group, you have to value the group financials, group shares. In valuing group shares, you may decide the group balance sheet, right? Or you can decide based on the individual balance sheet as well, valuing your subsidiaries separately. Therefore, examiner will tell you whether you want to value the entire group or whether you want to value separately, right? That's depend. Examiner exactly tell you what is the way they want to do. Don't worry about that. Okay, moving into the presentation again. Now here see the third point. He requested vice chairman, that is Kosal, his son, to recommend alternative strategy to overcome this situation, which has an adverse effect on the group since there were very expensive modern plant and machinery that were not utilized at full capacity due to the low demand and tight financial position. Now see, in one point he is told that this market won't bounce back, but now he want to have alternative strategies from the vice chairman, from his own son, to overcome these working capital issues and underutilization of plants. Now we can't understand what the actually he really wants, right? But if you wait the two decisions whether he want to continue or divest, more weightage goes to the continuation again because he asked to vice chairman come up with alternative solutions to overcome these working capital issues, underutilization of their plants and the financial pressure. Now, sometimes your entire paper can be connected to this sentence. You may be a consultant or consultancy firm who consults. Kausal will reach you and ask you list of questions to answer to bring into the next board meeting. You will be the consultants to Kausal. He will give you list of questions. That will be the question in your question number 3. You have to answer the questions raised by Kosala. One is working capital, one is how to overcome the debt equity pressure, right? And how to overcome the underutilization assets. What are the possible? Because Kosala wants to come up with alternative strategies. Then Kosala will bring you new projects to you and ask you to evaluate, right? Or Kosala asks you to evaluate working capital issues and come up with the solution. Now, chairman asks Kosala to do evaluate and come up with alternative. Kosala will transfer that responsibility to you. Then you have to answer all the question. Okay. Moreover, the banks is also putting pressure due to the outstanding overdraft facilities. Using that debt of the group need to be restructured. Yes, you saw that, right? Most of not all the companies have significant debt position. One company is already financed only through debt because your equity become minus. Meantime, you borrowed overdraft at 17% and long-term rates at 15%. Market rates 14 and 12 respectively. My last point highlighted it, right? Company enjoying 17% for overdraft and terms loan 15%. Market rate 14 and 12 respectively for overdrafts and term loans. Now they have a financial pressure as well. They have working capital issues as well. They have uh, underutilization of assets. Now, if you connected these 3 points, see, working capital issues, underutilization of assets, financial pressure. What are these 3 things? If you take technically, underutilization of assets means asset utilization ratio, reflected by asset turnover ratio, right? Underutilization of plant and machineries, the underutilization of capacity reflected by asset turnover ratio, number 1. Then financial position pressure is coming through debt to equity ratio, gearing ratios, right? And working capital issues coming through the working capital ratios and the as well as the net profit margin ratios. Now, if you take all these 3 together, that is DuPont analysis. In financial management, there is a analysis called DuPont analysis, consists of 3 ratios together to get the ROE, right? They are touching those things, that they are touching that financial leverage and operational leverage. They are talking about that impliedly. Therefore, you have to focus these 2 areas. What is financial leverage? How it's overcome. What is operational leverage and how it is overcome. That tight financial positions talk the financial leverage, working capital issues, right? And the capacity utilization talks about the operational leverage. Therefore, note down, this can be tested. This was tested 2002 as well, 2022 as well, right? The same thing was tested. What is financial leverage, how to overcome operational leverage, how to overcome, what are the symptoms given in the case, everything you have to understand, identify that paper. Therefore, note down that you need to thoroughly study these 2, right? Then the board of directors requested finance director to renegotiate with the bank, explaining the current situation of the group and fact that existing interest rate offered by the bank for overdraft and terms loan 15 respectively. This is excessive compared to the market rates. Now, this will give you a hint for the cost of debt as well, right? If they have restructured and come down to 14 and 12, that would be the cost of debt before tax. If they can't restructure, you have to take the cost of debt as 17 and 15, right? That's how you have to use. That's depend how they restructure their debts. That will be given in the unseen. Moving into the next slide, the Kosal whilst agreeing with his father about the current financial status of the SCP said that the proposal of the bank for restructuring of debt should be viewed positively, as the construction industry has bright prospects. Now that causal telling, yeah, banks going to be accepted. Most likely, bank will accept our restructuring proposal. That means you will be ended with the lowest rates. No issue now, right? That means you can take that 12-14% story as the cost of debt. If you want to do the calculation of cost of debt, it's before taxes, right? Now, again, they have a problem, the increase of VAT, that is not mostly connected to the CFRM, but keep in your mind, there is a VAT impact also because of the increase of the rates. The finance director pointed out that due to the existing import restrictions imposed by the government, the supply chain of the group has adversely affected. The poor quality raw material were being purchased to meet the current requirement. Last 2-3 years, there were some restrictions to import construction machineries, plants, material, everything, right? Even for cement. Therefore, they had to purchase low quality material locally to fulfill their projects. That was made because impact on their slogan, because their slogan was to give high quality product, right? Therefore, now they are highly concerned about the quality of material. Based on that issue, because this is highly connected to their slogan. If you go through their slogan, they highly talk about the quality. Because of the restriction, they had to go to low quality material. Now, their reality and the slogan totally different. Now they want to overcome and come back to the slogan, right? Therefore, they suggested acquiring 1 or 2 local manufacturing establishment as a strategy to have good quality products and maintain the company's vision. See, that's connected to the slogan. Now here they are proposing, let's buy more companies, let's acquire more companies. Now they're talking about the less quality raw material and supplies, right? That is SML company. SML company can't supply high quality because of the restriction. And the parent also can't find out material because of the restriction. That's why they want to buy. It's just called backward integration, right? You are going to acquire companies who gives you material and the support for the construction activity. That is backward integration. They want to acquire 1 or 2 local manufacturing establishments. Just like cement manufacturing company, note down, they may acquire a cement importer. You can see Singa Cement, Runu Cement, Sanstha Cement, lot of cement companies available in Sri Lanka. Their practice is they import cement, pack and sell, right? If they can buy a cement import company, they can have high quality cement at low cost because they can ignore that margin made by the outside supplies. Therefore, there is a possibility of acquiring cement manufacturing company, right? Or other material manufacturing company. That's the other possibility, right? Now, there are so many that companies in the supply chain of construction, right? Cement, imports and distribution, one company. Then bricks manufacturing. Then mixing. There are separate companies in Sri Lanka to supply that concrete mixtures, not the machinery. They will mix the concrete and supply to the site. Most of the construction companies, if you take Sangen, Maga, Tudave Brothers, right? Those are the big construction companies, Sierra, then Access Engineering. They are the construction big players in the country. Now, most of the companies for most of the project, they are not use their own concrete mixing machines. Now in Sri Lanka, we have 2 or 3 companies. Their business is buy cements, mix according to the customer requirement, and supply mixed concrete to the site. Right? Therefore, you need to understand this construction industry carefully. Now, if you construct your own house, you know your mason bars will come with the concrete mixing machine, just like that big bucket that is spinning, right? They will put all the things into that machine and they will mix the concrete and put, right? But big constructions, all the supply chain activities, there are separate companies. One company is applying concrete mixtures, one company supply mixing machineries, one company supply cement, one company sometimes supply water and other chemical. Now they are looking to acquire that type of business. It may be a concrete mixing company or cement imports and distributing company. Because by acquiring those things, you can reduce your production cost for the construction, because the outsiders always keep a margin, right? If you can have your own companies, you can wipe out this margin part. Therefore, my request within this weekend, try to read articles, right, relating to the construction industry, to understand the construction industry. Because even I, before I accept my job, current job as a CFO in my current company, I also thought these construction companies buy machineries by themselves and buy cement, buy other chemicals and mix concrete. No, most of them now buying it from outside. It's readily available concrete, mixed concrete is available now. Then in construction, don't think concrete, cement, bricks, all hardware items are the only thing. No. You know, MEP activities in a construction is take a big part, right? That is electrical activities, then plumbing. You know, you have to put all the water hoses and everything, wiring. It's a big task, right? Then those that they may be acquired those companies as well. For an example, that Sanken, for an example, right? You know Sanken. Sanken can acquire Eslon pipes company or Anton pipes, because for their construction they need that pipes. Oh, Sanken no, Sierra can sorry, you know Sierra, they have their own cable company as well, right? Wirings to produce wires and other switches and everything for the constructions. For building, you need those things. Therefore, it's highly connected, big supply chain. Then the next slide, Sunshine Group did not declare dividend, right? Dividend for the last 4 years, although the group had a good reputation for the declaring dividend. 50-60 of the profit attributable to the equity holders previously. All the way since its inception. Now they are currently not declaring dividend, right? Chairman brought to the notice of the directors that until the economy reaches stability, the company becomes financially strong, profit will not be distributed as they need to be accumulated to meet future development and expansion need. This was the last important sentence included in your present before the financials and other information. Chairman mentioned, don't declare dividend, accumulate your profit. We want to meet our future development and expansion need. It gives us a hint there won't be a disposal now. See the flow. There won't be probably more than 60-70%. There won't be a disposal. There can be an acquisition, new projects, foreign projects, managing working capital, because chairman wants to continue his business. A few investors of SCP are not happy with the management decision because they are not going to declare dividend. You know, 40% public holding, right? 40 for that Mr. Appuhami, his son has 16, and other two friends has two altogether they are 60. Balance 40 with the public. Public not involved in the, I think they are not involved in the management. Nobody in the board from the public 40% stakes. They may be dissatisfied with the dividend policy. They may want to sell their stakes. They want to dispose. They mention it. Willing to dispose their shares. How to dispose? They have to find out another investor who wants to buy shares. It is difficult in construction industry now. Then only option, share buyback. They may ask Mr. Appuhami to buy back their shares. Again, you have a share valuation, right? to buy back shares, because the public make big shareholders within the 40%, public 40%, they may ask company to buy back their shares. That's depend. But generally, they can't transfer those shares to another investor. Nobody will sell their job yield shares and come and buy these construction shares. Nobody sell bank shares and come and buy these construction shares. Therefore, these existing shareholders, it is difficult to find out another new shareholder to transfer their shares. Only option, sell that shares back to the company. That's a possible share buyback question. And 5-year forecast for the group as well as SML as well as SREL. The first time in the history in past, the pre-seen for individual wise, for group wise, 5-year forecast is given. Right? Not only that, these are the important inputs. This is very important because I met some student last exam. That student is scored less than 30 marks because of she couldn't find beta factor given in the pre-C. Don't do that this time. Beta and everything given. These are all the information you need for VAC calculation if you have a share valuation, right? I have pointed out within a table internal information, parent company, SML, SREL. Keep in your mind, your parent company is a listed company. Therefore, this is very important. Carefully listen to me, right? SCP, Sunshine Construction PLC, is a listed company. Therefore, you don't want to go for a similar information. You can go for the level 1 information for fair value measurement. Because market price available 159 rupees per share, beta is available 1.2, market risk premium available 7%. Therefore, easily for the parent company, you can calculate cost of equity. But when it's come to SML and SREL, those two subsidiaries are private limited companies. Only you have their debt to equity ratio, which I have presented in my table. SML 1.8 to 9.4. Please recalculate it, right? I may have some mistakes. Therefore, please check it again. In the segment information, it's available, total assets and total liabilities. Therefore, you can easily get the equity and calculate debt to equity. I have calculated, I got 1.8 to 9.4 for SML, 3.6 minus, because SREL, you know, equity minus 3.6 to 11.3 for SREL. That's the debt to equity ratio. Since those are private limited companies, examiner gave you information of similar companies. Go for the level 2 information in fair value measurement. Here, fair value measurement is the share valuation, right? Share valuation is a fair value measurement. That's why you need to connect with accounting knowledge. You can't be a chartered accountant only having financial knowledge in your mind. You need the accounting knowledge as well. Now, share valuation is a fair value measurement. To fair value measure, you can use level 1 information, level 2 or level 3. Using direct market information when it is listed, that is level 1 for HCP. But SML and SREL private, you don't have level 1 information. That's why you go for the similar company information. They have given beta, they have given you debt to equity ratio, and RP is the risk premium, right? RP also given risk premium for two similar companies to SML and SREL. Then I have extract that previous sentence first update. Bank overdraft 17, the market rate is 14, long-term loan rate is 15, market rate is 12. That Khosala mentioned that banks are positive for restructuring. If so, your term loan rate will be in future 12%. Always share valuation will talks about future, not the past. If debt restructuring become positive and bank accepted it, rate probably come down to 12, then you can take 12% before tax for term loans. Now, this my big table, internal information table and cost of debt table, highly connected with the calculation of WACC, right? To calculate the WACC of each respective company. But you can see your left hand side, market information. This is given as it is in your pre-C. 10-year bond rate, that is a risk-free rate. Again, you can use for the calculation of cost of equity. But look at the other 2 points given. Very important. Very, very important. The other two market, the number one is the risk-free rate. That is for the WACC calculation, the special cost of equity calculation. But look at the second and the third point. Current exchange rate USD, 309 buying price, 320 selling price. Then forward rate, 6-month forward, 1 year forward. Now what do you think about that? This may connected to foreign projects or foreign acquisition. Or foreign buyer will come and buy this company, part of this company. Those who have that public 40% can be acquired by a foreign supplier, foreign investor. Therefore, this tells us, I believe, this will be connected with a foreign project appraisal. Right? And sometimes this can be connected with foreign exchange risk management as well. But my mindset always, it's telling continuously today, this can be a foreign project appraisal. This is continuously told. I told in my class last 3 Sundays, I told my students foreign currency related project appraisal can be tested. Right? I believe that can be happen now based on this information given, because this is the first time foreign exchange rates and forward rates given in pre-C. Right? Okay. And my final slide. This is my final slide. Based on all the information, right, I have identified these things. In your syllabus, project appraisal, you have 3 topics. Working capital, you have a topic. And group structuring means valuation, disposal, amalgamation, everything. Right? I put a group restructuring, but you don't have topic called group restructuring. You have share valuation, business valuation, mergers, amalgamation, disposal, acquisition, everything, right? I have to put together group restructuring. Now, I believe these 3 areas can be tested. Because if you go through your question number 3, over the last 5 past papers, they are not trying to check. One question covers more than 25 marks. If you go through carefully the past paper analysis, right? They have not tested questions giving more than 25 marks for the out of 15 question number 3. They wanted to cover 2-3 areas. Even in last paper, can you see there are 2 big questions, right? In question number 3. Likewise, I think they will cover project appraisal, working capital, and this restructuring, group restructuring, all together based on these topics. If you take the project appraisal, re-evaluation of abandoned project in court take, examiner can easily test real options. Under real option in your study text, there are 3 topics under real options, right? I also covered only 2 so far. I had to cover another 1 topic in my class. That can be tested with this court project. That means, say, wait for another 1 year to commence the construction or recommence immediately. That can be tested. And very simple for in construction project appraisal. Right? Now, you know, these days Africa region, India, Bangladesh, Maldives, there are so many projects going on. Some Sri Lankan companies doing their business there, especially Sanken overseas, doing many projects, as I know, through the newspaper and the market. Then other Maga, those are and other big manufacturer that companies construction companies in Sri Lanka doing foreign projects, then that type of project can be tested. That is project appraisal. Simple. In when it's come to working capital, definitely working capital will be tested. You may ask to understand working capital issues segment wise, that is individual company wise and the group wise, and ask what are the remedial actions. This question was tested in 2022 in December, I think. December or June, I can exactly remember. There was a question paper not tested for valuation of project. Big question had for working capital in December, I think, last year. Right? Same thing can be happen this time with working capital and group restructuring, acquisition one or two local manufacturing establishment. Then you have to have a valuation for the acquisition to decide your purchase consideration. Say you are going to purchase a cement manufacturing company or cement imports and distribution company, or you are going to acquire, as I told you, that concrete mixing company, ready mix, it's called ready mix companies, right? Ready mix company or another construction material or
So
machinery
excuse me.
construction. Yes.
So there was a statement saying that the loan rates are excessive compared to the average market rate. So there can be questions relating to credit rating and overcoming from that.
Credit rating, Buddha, but here I think they gave the rate, especially bank rate, according to your syllabus, Buddha, I'm talking, right? Out of the syllabus, you are exactly correct. But when it's come to the syllabus constraint, interest rate only connected with cost of capital calculation and interest rate risk management. Am I correct?
Yeah, but in syllabus also, I think there's a small section regarding credit rating in the
That is
early
credit
stage.
rating for Buddha for that cost of capital calculation. You are correct. In credit
Yes,
rating
sir.
is required to put the risk-free rate and the risk spread, right? You are talking about that part.
Uh,
That got given for the to calculate the spread. Neither.
Yeah, yeah, you are talking about that part, Buddha. Credit rating connected to identify that is the premium on debt cost. That is generally
Yes.
debt cost will be calculated risk-free rate plus risk spread. Risk spread means the premium you will add before you lend into a specific customer. That premium will depends on your credit rating. There are some models also. In the previous study pack, you had that models as well. This study pack just mentioned those models, but that spread can be tackled from there. But I think they are trying to give you the cost of capital calculation to get the cost of debt. Right. Then in group restructuring, this ready mix company, cement manufacturing or imports company, other material manufacturing company can be acquired. Therefore, you have to make a share valuation of that target company to decide the purchase consideration or decide whether their offered price is correct. One. Other one, valuation of SCP shares, that is parent company shares for share buyback or delisting. Both can be happen, right? Because I know one of the biggest companies in Sri Lanka now uh, was not able to submit their audited financials to the Colombo Stock Exchange yet, even for 2022. They are facing a lot of issues because of listing. Therefore, if this case connected to that also, there may be think about the lead listing, or they may buy back shares from that unsatisfied shares holders. Then you have to have a share valuation for the parent as a whole. Then valuation of Israel for disposal, right? These days, most of this condominium apartments, construction companies, those who are involving in condominium property developments, just like now you can see so many condominium property developments coming up. One of the famous companies, Blue Ocean, one of very famous lecturer we had in our industry for strategic management. That we call Tumilan sir. He is running that Blue Ocean company, right? That's why it's more familiar to me. Then fairway residencies, right? Then lot of condominium property development companies we have. Out of that companies, few companies are available for sale because of the issues they have mentioned. Enough material, low quality material, or lack of material, no demand for apartments, people doesn't have money. Because of these issues, those are available for sale. Some companies, therefore they may dispose their SRL because one project already abandoned in court according to the PC, one project already completed and waiting for sale. Sometimes that can be disposed because that real estate sector, especially condominium property development, will take another at least 5 years to boom. In the reality, I'm talking about the Sri Lankan economy, right? Another 5 years. Therefore, as if I am the CFO or finance director of this SCP, the group, definitely I will ask my shareholders to sell this real estate company and use that proceed for the expansion of other companies, or at least get rid of this loss making entity, because you have minus net asset there, right? Better to get rid from this company. That can be happen in your paper as well. Then finally, application different valuation techniques for SML and STRL. We always think about that share valuation based on cash flow discounting method, but sometimes other two techniques, I'm not talking about dividend model, but price earning method as well as the asset base. Now if you take STRL company, right, they have a lot of assets with them. For an example, the project they completed before COVID in Colpity, they have in their hand as inventories. They have mentioned it in the precinct, right? And partly completed Court project also, they have in their inventories, work in progress. Those are started before COVID, but now pricing and everything went up, material cost went up. Therefore, you have to reprice it and value the business with the new prices of the assets. Even in construction material, everything, machineries, everything went up. Therefore, you can use asset-based valuation instead of cash flow valuation for this negative net asset business. Therefore, different valuation techniques also can be tested, because this was not tested over last 2-3 papers. This is my overall picture about the precinct, right? Now, moving back to the first slide again, I think I have explained what I have actually realized and what I thought after went through the precinct in 3 times. I actually read in 3 times to take out these points. Therefore, my number one request to you: you must read this piece in at least 5 times, right? If you can make this type of presentation easily within half an hour, that's the point. You must stop reading the PC. But don't do that. You are the candidate at the exam. I'm not the candidate. I just explained to you. You must be able to prepare better presentation like that before go for the exam. That's my standard. I am expecting from yourself to pass the exam. Therefore, you have to read at least 5 times the precinct. Now, that's all about my idea about the precinct. Now, I will tell my next plan, right? Actually, I have started only doing physical classes from last batch onward. Therefore, all the areas I have identified my practices, once I analyze the precinct, I will cover all the identified area with model questions, right? Now here also, for the identified areas, I will do model question at my class within this coming month, right? Meantime, don't worry, I ask my students also to ready for some Teams or Zoom classes weekday evening like this 8 to 10. Then my plan is to conduct physical class Sunday morning and some additional class at the weekday evening like 8 to 10 through Teams or Zoom to cover these areas, right? Therefore, I will ask JMC management, I ask not to record my lectures at the physical class, but from this day onward, I will ask them to record my classes, right? Then if you can't, you are unable to join the physical classes because you are in abroad or you are remotely working, then you can take the video, right? Therefore, don't worry. Physical class, I will ask them to video, and I will conduct some online classes as well during weekdays within this month. Then you can join. I will cover what I have identified with model questions during this month. I will wish you all the best for coming exam. But my humble request, Pata, this is a humble request because I'm working at the industry now. 2-3 years ago, I was in audit firm. I didn't understood that, but now I am understanding. Weekly, we are rejecting more chartered accountants at the interviews because of lack of knowledge, right? Therefore, I will wish you all the best to become real chartered accountants. Be a real chartered accountant. You have unlimited opportunities in the market. Thank you very much for the participation today. Again, wish you all the best.